Dear students and working accountants, welcome to my Export Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. In this video, we are going to cover a topic, unregistered dealer accounting in his books. That is how the unregistered dealer will make the accounting entries. That is accounting by unregistered dealer. But this, so far, we covered everything about the registered dealers. That is, under the GST Act, as far as the registration is concerned, there are two types of persons, business people. Registered dealers, we call it registered taxpayers also. Registered dealers and unregistered dealers. So under the GST Act, any businessman or any business whose turnover crosses or exceeds 40 lakhs and 20 lakhs in some cases, some states, and 40 lakhs in some states, that limitation is given to the states. The state can fix the limit. Okay. So depending on the limit, if the turnover crosses the limit, the dealer, the person has, the business has to get registration under GST. Okay. So if the dealer crosses the limit and that is the usual limit and registered under the GST, the dealer is called registered dealer. If not registered, that is not cross 40 lakhs or 20 lakhs, then no need to get registration. But voluntary, even if the turnover is not crossed the limit, we can get registration voluntarily. That is okay. You can get the optional. So then, even if you optionally register or mandatory registration crossing the limit, you are called a registered dealer. And the limit is not crossed, we don't want to register till the limit is crossed, then is called unregistered dealer. So two types. In the registered dealers, in the registration process, that is for the registered dealers, there are two schemes. They are called two schemes. One is a regular scheme, another one is composition scheme. Regular scheme is meant for everyone, anyone can become that, everyone registered under the GST Act, he will be a regular dealer. So regular dealer means he has to file two returns. One is GSTR1 for disclosing the liability and the GSTR3B and for the payment of taxes. Two returns have to be filed. So they can be filed by the regular people in two ways. That is, one is every month, that is monthly mode, and another is quarterly mode. So two choices are given, but there is a limit for that. If the turnover is not more than 5 lakhs, 5 crores, not more than 5 crores, then you can take any scheme, that is either monthly scheme or quarterly scheme you can take. Monthly scheme is every month you have to file 2 returns. Quarterly means you have to file 2 returns every quarter only, but every month another one statement is to be filed. That is optional. The statement is optional. You can file or not file. That is the statement every month, but you have to pay the tax every month, because if you pay the taxes by filing the 3B quarterly, so the government will not keep quiet without collecting the tax for 3 months. That is why you are filing the returns quarterly, but tax is to be paid every month. It is called as QRFP, quarterly return, but monthly payment. And in the other case, that is monthly filing, that is called monthly filer. He has to pay the, file the taxes, returns every month and file the taxes also every month. So in this case, the first quarterly filer is called, it's also simply called as a regular scheme only. The regular scheme is called a regular dealer. And who is opting for quarterly mode of returning, filing the returns? It is called as, the scheme is called as QRFP dealer. So regular dealer, QRFP dealer, both are regular only. Under the regular scheme, regular dealer and QRFP dealer, quarterly, monthly. The other one is composition. It is meant, I told you, the previous video we covered. It is meant for small traders. And one more thing, the quarterly. So up to 5 crores, you can opt for both. Anything you can cut. You can opt quarterly or monthly. But if your turnover exceeds 5 crores, you cannot opt for quarterly. So monthly only you have to file if your turnover exceeds 5 crores. That's all. And in this case of composition dealer, It is meant for small people, no restrictions, no need of keeping any books of to maintain books or stock register, anything. But there are some restrictions that all we learned in the video. So it is meant only for small dealers whose turnover does not exceed 1.5 crore in normal states, in special category states, in northeastern states and Himachal Pradesh. Special categories states, the limit is 75 lakhs, and you have to pay the tax that I told you already. From our package, you have to pay a small percentage without bothering about. We need not collect the tax as per the rate for the goods. For the stock items, the concerned rate we were not bothered. We have to pay from our pocket, but from our pocket on the sales amount. Okay, so that is all we discussed in the QRM, composition scheme, the Delaer. That is, I made two videos. One is about the rules and regulations, restrictions, etc. And the other one is accounting. And in many institutes, they will take up what is meant by this one, and they will explain about the QRM, composition scheme, but they never cover the accounting procedure in the books. In the books, how they make the accounting, that is not covered mostly. Okay. And so regular as well as regular means monthly or quarterly. And composition, these two types of persons are called registered persons. The other one is who are not registered. They don't, even though the limit is lost, so they don't want to register. Okay, even if they register it, they will become registered dealers. So limit is not, threshold limit is not crossed, and they don't want to, they did not get the registration. They are called unregistered dealers. So they are also business people. Up to 40 lakhs or 20 lakhs, their business, okay, up to crossing the business threshold limit, they will not register, they will not, they are all unregistered dealers, but they still, they do the business. Then how they will, then they register, they will go regular dealers. So already we learned regular dealers, traders, manufacturers, service providers, and QRMP that we will learn. That's only maintaining books are same for regular scheme. Only filing method is different from monthly, quarterly. QRMP and regular scheme. This filing method is different, but accounting is the same. Accounting procedure is the same. And for the composition, the accounting procedure is different. For unregistered dealers, how they maintain the books, how they make the accounting. But simply here, I will tell you one thing. This unregistered dealers accounting by unregistered dealer is just very similar to composition here with some little differences, because some regarding the some settings. So some settings we make in the books of, in the case of composition dealer, we make some settings. But in this case, there will be no settings at all, except that mostly both are safe. That we will take up today. See here. Here, see. So our composition unregistered dealer accounting in the latest release is 4.1. So in this 4.1, how the unregistered dealers will do. Okay, that we will take up. See here, first of all, in any case, first of all, we have to create the company. See here, I created the company already. So here, go to this place, take alter, then you see the register come in the creation page as alteration. So when you are creating, it is called as company creation. After creating that, whenever you open that, it is shown as company alteration. So here, go to alter page, see company alteration. We are creating a new company. For example, in this case, see here, first option, we take create, the same page will open, the same page, but it is called as company creation, opening a new company. In this case, we are going to view that alter always is for creating as well as always for creating as well as viewing the already created things. So go to alter. So the same thing is different. So creation is the same in every case. So unregistered dealer accounting name I have given state, and India is taken in the beginning by default. Then PIN code and other details, telephone, mobile, email, all these things. And the year, this is the already new year started. I am taking this 1st April 24, 1st April 24. All these are not necessary. All these are not required. Okay. So here, now it is created. So when you create that, automatically after creation, it will go to F11 company features. But here it's already created, it will not go. We have to go manually by pressing F11. So F11, we are pressing, that is company features. So in the company features, company accounting. So accounting features, maintain accounts, bill wise entry, everything okay. And even the unregistered also deal with the goods. So it is dealing with goods, maintain inventory, yes, integrate accounts, inventory, yes. And here, see, by default, it will be yes. By default, it will be yes. That is, enable goods and services tax. This will be yes by default. If you click that, a regular will be selected by default. But here, in this case, if you take yes, here there is no unregistered. Okay. That is why here, in this case, we are not registered means, so GST Act, that is Goods and Services Tax, is not applicable to this unregistered dealer. That is why don't not necessary to enable the goods and services. We are not bothered. So we make it no. That is disable that. By default, it will show enabling. Yes, we make it as no. That's all. Then all others accept, control, yeah, accept this page also. So we created the company and GST applicability we disabled. For regular composition, GST is to be enabled. For unregistered areas, GST is disabled. Okay. Now I am creating, I already created some lectures, no, not created, and also goods also not created. Okay. But in this case, how we will make the entries? So first two steps completed. Okay. In the case of composition, creation, enabling the composition of regular creation, company creation, and enabling the GST, that is enabling the goods and services tax. Here it is disabled. That these two steps will be completed. Now, what you will do is by when you create a company, mostly in the masters, when you create a company, in this company books, it will show in the masters, it will show you go there, accounting masters, inventory masters, and statutory case. In the accounting masters and inventory masters, see here, this is masters. In this masters, create means if you create a master, creating a master. Alter means we have to view, we can view already created masters, and if you want to create, you can create new one. Okay. So in this case, when the company is created in any company, whether it is regular or unregistered, there are some 28 groups will be there in accounting masters. They will be created by default. So here, 20, because there will be more here. Something or some groups are created double or triple like that. So our exact 28 will be shown in numbers. Okay. So here, groups remain. There will be 28 default groups and 2 ledgers by default, cash and profit and loss account. So here there are 28 groups. We can create some other groups if we want, but these groups we cannot create again. If we create, it will show already existing. Okay, so 28 groups and 2 ledgers, cash and profit and loss account. These two we should not create again. And then currency, there is only one. So ours is default India. So Indian currency. And then voucher type. There are groups 28, ledgers 2, currency 1, and voucher type. There are 24 voucher types. That is the vouchers which actually the normal, the manual accounting we record in a book. But in the case of computer accounting, we record just like a paper. We record in the voucher. So they are called as, each voucher is called a voucher type. So go to voucher type. There will be 24, 1, 2, 3, 4, 5, 6, 7, 10, 11, 12, 13, 14, 15, 16, 20, 21, 22 are given. Some others are not there. So those we have to create. Actually 24 by default, what you call voucher types will be there. So they're already created. So in the case of accounting masters, these are already, some are created by default because these groups, these ledgers, these voucher currency, these voucher types are necessary for all the businesses. So any business, these groups are required, whatever the business. And here, any business, these two ledgers are required. And currency is rupees. And voucher, all these voucher types only We record any business will record in these voucher types, and if you want, you can create some other voucher types. Okay, but in this case, inventory masters, in this case, also stock group, inventory group, and the category, item, unit, everything will be, but these are not the same for every business. So stock item, one business switch to one business, their stock will be different. In another way, stock will be different. That is the stock items, so their group, units, how they will measure the stock. Some people kgs, some people liters, like this. So these are not fixed. So they are different for different businesses. So they are not created at all. No default ledgers. I mean, inventory masters, groups or items or units, nothing is there. And in the case of go down, there will be one for any business. They have to keep the business goods one place. That's called as main business. So main location. So default one go down will be there. Main location. That's all. This is the thing when you create. Now, what you can do is we have to create ledgers. First of all, we have to create ledgers, whatever required. And then we have to create the stock items also, and we create the purchase and sales also, isn't it? But here we can create in advance. Go to create, we can create ledgers, and we can create stock items also. But I always create through alter. If you go to alter, if you click ledger, so we can view all the ledgers already created. If a ledger is not available, then from here also you can go to this page and you can go to create page. So this page and this creating page, you go to ledger, both are same. So always I go via alter. So if you go to alter page, so we can create ledger now, and we can create stock items, everything. But they can be done. So in the beginning itself, in advance you can create all the things. But when you are entering the vouchers also, you can create. When you are entering the vouchers also, you can create. So and one more thing is here, since the dealer is unregistered, so there will be no tax implication, no GST in his books. So when he is selling the goods, he cannot collect the tax because he is unregistered. He cannot collect the tax. So there will be no GST ledger. So that is CGST, GST, IGST. There will be no GST ledger under the what you call under duties and taxes. There will be no ledger. But in the case of composition dealer, when he is purchasing, he has to pay tax from his pocket at a less percentage. Then it is called as expenditure. So he has to create CGST and HGST only local. HGST under the group indirect expenses, not duties and tax. Duties and tax is collecting and paying to government. Okay. In this case, in the case of unregistered, he will not collect any money. There will be no tax implication. Similarly, when he is purchasing also, there will be no tax. But the person who is selling, the supplier, he is a registered person. Unregistered or composition, they will not collect tax. If he is a registered person, he will collect tax from us. So in his tax invoice, he will mention the tax also. So we have to pay the total invoice price, including the tax. We have to pay them. But in our books, we will not show the GST because it is not implicated. So we cannot create GST also. So it is to be just like the here both are said, just like composition dealer, the total price of the invoice, including tax, GST, is taken as the purchase price. That is the only difference. And all other things, there no other reason. One is disabling that GST feature, that is enable GST features, GST features, that is tax, disable. Another one is here, by purchasing, there will be no GST ledger at all. Everything will be similar to composition dealer. First, we will go to vouchers. Now, first I am taking, say here, first we will purchase a goods. So here, purchase. So everything is same. Entries will be same. Here I will take one or two. Purchase, we will take up from X and Co. For example, X and Co. X and Co. I will take write as C. Just to remember that. This is a creditor. So sundry creditors. So bill wise entry, okay. And here see, we are not registered under GST. So the other person registered or unregistered, we are not because we are not collecting any tax, not paying any tax. Whether he is registered person or unregistered person, we are not bothered. When you are purchasing, if he is a registered person, he will give the tax invoice along with the tax, the total amount you will pay. That's so here there will be no tax, registration details for the person. Okay. So we created the creditor. Okay. Accept, accept. See here, nothing is given. Accept. Now we are purchasing the goods. So purchase ledger will be C. Purchases. This purchase can be created here. Purchase ledger, purchase interstate, purchase out of state, all this. But in this case, in this person, nothing is required. Here purchases will take as purchase accounts. That's all. See here, no GST applicability, GST report, nothing is asking. Okay. So directly take the purchases. And in this case, what you are purchasing. So here, stock item, because it is relating to stock item invoice. Okay. So what is the stock you are purchasing? For example, Dell laptop. Then laptop purchasing. Group, we can take as computer group. Group, we can take computer and then primary only. Here add the stock. Yes, because you show the stock balance of stock. Okay. And here, then here, what is the unit? How you measure these computers? PCS. Pieces are numbers. Pieces, PIE, CES. But here, there is no unit quantity, but because there is no GST. So, as per the GST Act, that unit quantity is not available. And here only, this we will take up. Not required. Okay. And after that, here, there is no tax eligibility also. On the stock also, there is no tax. We are not bothered about the tax. So simply, you think, for example, purchase 10, each one 28,000. For example, so 2,80,000. And then here, 2,80,000 we are purchasing. And here, for example, if he is a we don't know here, there is no tax registration type. But we don't know when we receive the invoice, in that invoice, we know whether it is registered or not. If it is registered, his registration number will be there, GST number, and tax will be there. For example, if he is a registered person, so here, we take up calculator. Take up calculator. Okay, we will take up the calculator. So here, what is the amount you are purchasing? 2,80,000. So we purchased 2,80,000. So 2,80,000. 2,80,000 plus we have take plus 18%. 18% is equal to 3,30,400. So here we don't put the rate, directly we will take 3,30,400, isn't it? 3,30,400. Total amount we will take now, automatically calculate rate. So we purchase for 28,000. So we purchase for 20. So it is not taking. So okay, 28,000 we purchase. 28,000 plus 18% means here 33,040 is the value rate. So 33,040. So automatically, total amount you write in the amount column, automatically it will calculate. And below that you go, here there is no GST at all. You cannot create GST also, don't have the GST application. Okay, so I accept it. That's it. The only difference is the total invoice price including that is to be taken as the laptop, goods purchase price. Okay, we purchased. Okay, we purchased from this and we will take up another one. We will take up second date, C225. So we will take up from here Y and Co. For example, Y and Co is also a creditor. Is also a creditor. So sundry creditor we will take up and everything Telangana same thing. And here accept, and here also purchases. Here in this case, what you are purchasing is, see where we purchased taxable goods. If we purchase from unregistered dealer, or purchase registered dealer, unregistered, any state you can purchase. But in the case of composite dealer, within our state only, our state with compost railroad can sell to us, sir, within the state. That is why if you purchase from any one of these two, unregistered or composition, so we are not doing anything here. In that case, there will be no tax. And also the goods, taxable goods means there will be tax that will be added. Non-taxable goods means nil rated and exempted means there will be no tax in the invoice itself. What they are giving is bill of supply. In that there will be no tax. So same amount we will use value we will enter. Now we will take up here name. We will take up sugar. So not sugar. We will take up rice. So rice means it is primary. You get the rice. In the case of rice, we use kgs. So kilograms. Okay. You like this? We use. And here there will be no tax rate. And here suppose we purchased 500 kgs. 500 kgs purchase each at 75 rupees. 37,100. So and also this is exempted goods and also related goods. For example, we take salt. It is also purchased in kgs and here also no indication. So purchase 500 kgs, we purchase for 25 rupees. So this is the purchase. Okay. So we purchase this, we enter here in this case. So they are rice exempted, the salt is nil rated, so there will be no tax. For example, if it is even if this is taxable, if Y and Y is an unregistered person, in his bill there will be no tax. So then we will enter the same amount given in the bill. If there is no tax, if there is tax, total amount will enter. If nothing is there, we will enter the whatever in the bill that we will enter. Okay. So we made two purchases, and now we make the sale. Two sales we will make. Okay. But whatever it may be, we make the sales. In the case of sales, there will be no tax also. So in this case, go to F8 sales. So in this case also, you create Raghu is a consumer or unregistered person or anybody, we are not bothered. In the case of if you are registered or composition, if you are registered, we have to collect tax to whoever we sell. We sell to registered, unregistered, composition, anybody we have to collect the tax. If we are composition, we should not collect tax from anybody and also sales only within the state. We should not tax collect from anybody. And if you are unregistered, also there will be no tax at all. So he is called as sundry, debtor, and also the same Telangana, whatever the state may be, we are not bothered. So here we are selling, and here the same thing accept, and here we have to create sales. For sales also, see, we have to create the sales, we create the no sales we are creating now. Sales we are creating under sales accounts, nothing, no tax liability, nothing is given. So sales we have taken, we will tell the same thing. Laptop we are selling. For example, we are selling 5 quantity. What is the amount to be quoted? Here, go to Alt yes. So what is the purchase rate? 30,040. So which profit you sell for it? For example, 36,000. For example, 36,000 we are selling. Because we have to include profit and sell for the more than the selling purchase price. We cannot sell less than the sales purchase price, then we will get a loss. Okay. So like this here, we will do. And here also, we are not charge any tax. So that's all simple. That's all. Okay. And again, 2nd April, we are selling to another person, or we are selling for cash also. Sometimes we'll take cash at all. For cash, we are selling. So here, and sometimes there is no tax at all. So no cash sales. And now we are selling rice 50 kgs. So what is the price? 75 rupees. We sell for 85 rupees. Okay. And then salt. We sell salt. Salt also. We sell 50 kgs. What is the selling price? You have to purchase price. You have to see 25 rupees. We sell for 35 rupees. Okay. That's all. Here also no tax. Okay. So we completed. So 2 purchase and 2 sales we made. Okay. Another. Who is a debtor? Raghu is a son. Raghu is a debtor. Okay, sundry data. Okay, okay, the sundry data. We sold to, we made two purchases. Only one is cash, yeah, one is cash and one is so. So two sales we made. So okay, and now I told already made in the videos. If you want to see the transaction account place, go to table, click K, and if you click the total amount, if you want to see, Alt F2, remove the from date, come down, remove the to date, enter. Next will come to, so remove here, take the Alt F2, escape or space bar, that will be removed. Then click enter, come to the next one, again space bar or escape, over. If you do that, from beginning to the end, last entry, all the entries will be shown. Or if you want some dates only, so what are they? 1/4/24 to 1/4/24, only one day, like that will show. Otherwise, if you want to see the total period, simply without clicking Alt F2 from date to date, simply you can take F2. Date change. Here also remove the date. So all the entries from April 1st to last entry, it will show. So we can see the entries, two purchases, two sales. Now go to, if you want to see here, you will see the GST reports for other people. Okay, here you go to display mode reports. See, there are no GST reports. If only GST is there, GST reports will be there. But in this 4.1, these MSME reports are added. That's why here they will show GST and MSME. Combining it is called as statutory reports. So here there is no GST report, so only MSME. To go there, only MSME reports only. Those GST reports. So, okay, in the case of registered people, GST reports also will be there. Okay, now we go to profit and loss account. So, Alt F1, Alt F1 or Alt F5. Full details will be there. Again, to go back, the same thing, Alt F5 or Alt F1. We have to click. That is be brief. That is summary. Alt F1 or Alt F5. Total bill. Total in a detailed manner. So here opening balance is not there. Purchases we made total purchases, and sales we made total sales, and these are the stock we have, and this is the 15,800 rupees is the profit, simple profit and loss. Now go to balance sheet, again Alt F1. See here sundry creditors, we made purchases to the from the sundry creditors, that will be shown here. Closing stock what we have, and sundry debtors we sold to them, and cash in hand 6,000. Acha, we made cash sales now. So we sold for cash. That is why there is cash sale. So for the cash sale, 6,000 rupees, we have cash. So this is the balance sheet. So like this, it's very, very simple. But whether it's registered or not, he has to maintain the accounts. That is why how the unregistered dealers will maintain without any tax, simple accounting. That, but the difference is when you are purchasing, there is tax in the invoice which we get. Add that total invoice price, you have to take as purchase. That is the only difference. And all other things, you pay expenses, bring capital, pay into bank, withdraw from bank, pay expenses, get some commission or some income. All the entries will be the same. Only, but on any entry, there will be no tax. If you get income, pay expenses, purchase services from auditor. So that also we will not have GST implication. So we cannot show the total invoice basically. We have to show. Okay. So this is about the general account, accounting by unregistered dealer. Okay. And one more thing is here. Many people they are watching the TV, watching the videos, but they're not subscribing. Please, everyone visiting the videos, please subscribe to me, subscribe to the channel, and click the bell icon and select all. You will get notification for all the videos which I upload. And every video, watch till the end. Then only you will understand. And after watching the video is good, please like the video. If you like the video, the YouTube will recommend this video to many people. So all the people also will know. And also, one more thing, I am taking the online classes also for Tally, Prime, GST, TDS, TCS, everything. So if you are interested you can contact me. My number is given in the thumbnail. You can contact me and you can join the classes. Thank you. Good night.